Hi everyone and welcome back to my YouTube channel. If you guys are new here, my name is Juliet Rebello and I am a realtor and investor here in Orange County, California. If you've been following my channel, you know that I usually kick off with a recap of the past week, what happened, what we learned, and what's setting up for the week ahead. But today I wanted to shift gears and go back to the fundamentals. I want to talk about something way more important than any single trade, what it actually takes to become a consistently profitable trader. Before we dive in, I want to address some questions I've been getting about my background. Questions like, hey Julia, did you go to school for this? And honestly, I love when you ask me stuff like that because the questions often reveal more than any answer I could give. They show the assumptions a lot of people make about what it takes to succeed in the markets. Here's the simple truth. No, I didn't go to school for trading. I actually studied international development at UCLA and I took my fair share of economics and history classes, but nothing I learned there taught me how to make money in the markets. Not a single class. I feel like college teaches you how to learn, but trading demands something else entirely. Curiosity, discipline, and a work ethic that nobody can give you. I'm building that for myself. That said, even though I didn't study trading formally, myself and people in my trading group have made it a point to educate ourselves about the nuances of trading and investing. For example, there's a trading program called S&B Capital that also offers professional level training programs, and they aren't cheap, but in my opinion, they're absolutely worth the investment if you know that this is something that you want to pursue seriously. I haven't gone through the course, but I know people who have, and I feel like they are better traders because of it. Now, if you're new to trading, I wouldn't start with an expensive course. I'd recommend starting simple, watch my videos, read a book or two, and subscribe to real financial journalism like The Economist or Bloomberg. And if you find that you enjoy the process and you're ready to commit real time and energy into it, then it makes sense to invest in a more serious education like S&B Capital. But here's the thing that most people miss. Trading isn't just about clicking buttons and placing orders. It's about all the decisions you make before you even touch the keyboard. And that's what I want to get into today. Okay, so let's talk about the 3 pillars of profitable trading. So like I said, you don't need a college degree to become a consistently profitable trader. But here's what you do need: information, fundamentals, and technicals. For today's video, we're going to focus on the first pillar, information. So when I talk about information, I'm talking about macro conditions, the big picture economic and political factors that influence the entire market. Macro conditions include inflation. Are prices rising too fast? Employment numbers, how many people have jobs? Geopolitical events, wars, sanctions, elections, even emerging tech disruptions like DeepSeek challenging American AI dominance. And the one trait that you need to have to master the information factor is curiosity. Macro conditions are like your weather forecast. They reveal what's happening in the world. And just like a storm can ruin your beach day, a shift in macro conditions can wreck your portfolio if you're not paying attention. These factors impact stocks every single day, even your long-term holds. And if you're not tracking them, you're flying blind and you might just be left holding the bag. To be a successful trader, you have to want to know. Be curious about what's happening in the world because that information will inform whether to go long or short or whether to divest from a stock or keep holding. Now let's move from theory to reality because information isn't just about knowing things. It's about seeing moves before they happen and positioning yourself accordingly. Okay, so let's talk about some real-time examples. So last week, President Trump tore into Federal Reserve Chair Jerome Powell, calling him a major loser and saying his firing couldn't come fast enough. Now, if you're a day trader, you have to act on that. Why? Because Wall Street hates political interference with the Fed. The market plunged 3% on that news. Then the next day, Trump says, "Oh, I'm not firing him at all." And guess what? Stocks rallied. That's how sensitive the market is to information. Sometimes just a tweet can flip everything in minutes. And if you were tracking Truth Social or Bloomberg in real time, you could have capitalized on that volatility, setting up option plays to profit both ways. Moral of the story is when leaders attack central banks, markets panic. And if you know that pattern, you can trade it. If you guys want a deeper dive on the Trump-Powell feud, check out my last video where I break down the real motivations behind their beef. Okay, let's talk about another example, tariffs. When the Liberation Day tariffs were first announced, the market almost crashed. We're talking $5 to $8 trillion wiped out. And if you were asleep at the wheel, you took a brutal hit. Sometimes it's just about mitigating risk by exiting your positions before the damage gets worse. That's why information matters. Just look at the Magnificent Seven. Goldman Sachs recently rebranded them the Maleficent Seven. And for good reason. So these tech giants, once seen as untouchable, are now under siege from multiple fronts. Trade wars chipping away at global revenue, supply chain disruptions like Apple having to move its manufacturing to India, regulatory crackdowns limiting growth like Nvidia, who is now barred from even selling its scaled back H2O chips to China, which will impact its revenue growth. This isn't just a minor setback, it's a fundamental change in the landscape. And if you're trading these names without tracking these macro risks, you're essentially driving with your eyes closed. And in this market, that's exactly how you can wreck your portfolio. Okay, so let's talk about how the world order is shifting. Even if you're a long-term investor and not a day trader, you still need to know your macro conditions. You don't have to be glued to the news all day like traders do, but you do need to stay tuned in, even if it's more passive. So here's an example of how macro conditions shaped where I placed one of my long-term stock holds, Rheinmetall, my favorite stock. At the time, there were clear signs of rising tensions between the US and NATO, and President Trump was demanding that NATO countries spend more on defense. So sure enough, NATO countries increased their budget so they could spend more on defense. Even more important, Germany, by constitutional mandate, committed to raising its defense budget by 3.5%. And Rheinmetall was going to benefit from that increased government spending. And that's how I used information to determine that I need to invest in Rheinmetall. And yes, you had to put the pieces together because no one is going to tell you to invest in Rheinmetall, except for me. They will, however, tell you what's happening in the world, and it's up to you on how you use that information. Another thing I want you guys to know is that information keeps you agile. So let's talk about gold. Whenever the world feels unstable, wars breaking out, inflation climbing, economies failing, investors run to gold. Not just individual investors, even central banks have been stockpiling gold lately. That's why if you caught my last video, you know gold demand is up right now. Prices are climbing and we might not have even seen the top yet. Now, some non-believers have been commenting saying, gold's a fad, it's gonna crash, and don't waste your time. And look guys, I'm not here to tell you to fall in love with any investment. I'm not emotionally attached to gold. I'm here to make money. And right now, gold is making money. Will it be the best investment forever? Of course not. Gold shines in chaos and it dims when calm returns. That's why I'm riding the wave while it lasts, and when it's time to move on, I will. But I let information determine where to move my money. And as soon as gold is no longer lucrative, I'll move on without hesitation. That's the mindset. You need to stay agile to stay profitable. Okay guys, so that's why I'm up at 5:30 a.m. every morning, scanning headlines, feeling out the mood of the pre-market, because I need to know what I'm stepping into before I make a move. Last week I talked about it like putting together a jigsaw puzzle. If you can take all the information that you're seeing and actually connect the dots, you'll be miles ahead of most investors. When the US says it won't backstop Europe's defense, you should already be thinking, Europe's going to spend more. Who are the defense contractors poised to benefit? When the US slaps a 145% tariff on Chinese goods, you should already be asking, which companies rely on Chinese manufacturing? Maybe it's time to lighten up on these stocks. When China pulls money out of American bonds and the stock market starts failing, you should already know where the safe havens are and how to position yourself. Everything is connected. And if you can master that, and if you can see the ripple effects before they fully play out, then you're already ahead of the pack. All right guys, so that's it for today. Thank you guys so much for hanging out with me. And if you found this video helpful, don't forget to like, subscribe, and hit that bell notification so you get notified every time I upload a brand new video. See you guys next time, and remember, be curious, stay smart, and build wealth. Have a wonderful week. Bye.